So, we just finished talking about the characteristics of a corporation. Now we're going to delve into the very important stuff. Now, I know I was going through a lot of not really concepts, but a lot of definitions and terminologies. But we're about to go into the concept of accounting right now. The concept of accounting. And I will say this, and you may hear me say this a couple of times too. The reason that accounting is hard is simply because of this. It's not the information that makes accounting hard. It's the preparation and the logical connection of the concepts that's embedded into accounting. Accounting concepts accumulate. They grow on top of each other. So whatever you're learning in this chapter, you have to know in chapter 2. And in order for you to understand chapter 3, you have to know what's going on in chapter 1 and 2. In order for you to know what's going on in chapter 4, you have to know what's going on with chapter 1, 2, and 3. And it keeps going. And trust me on that, it becomes very tedious to remember all of that information because it interlocks, it interconnects. Okay, and that's what makes accounting very hard or very critical, right? Because the concepts connect and they never let go. A lot of those other business disciplines that you're going to study while you're here in SBI, you probably can memorize the stuff and you could rightfully so forget some of it and won't have a real problem moving forward. That is not the case with accounting. That's why accounting is so difficult. So moving forward through what I'm about to talk through now, very important stuff. You have to watch this. You have to pay attention and you have to make sure you can execute this. Okay? So what we're going to talk about is the accounting equation. The accounting equation. Very important. The accounting equation. So, I'm going to share with you the accounting equation. And this particular equation sets the framework for what we do in terms of accounting, practicing financial accounting. Okay? So, I know we said we wasn't going to have a lot of math, and we're not. But this is a simple equation. Okay? Just addition in it. The accounting equation is assets equals liabilities plus stockholders equity. Assets equals liabilities. I'm trying to get this straight for you guys. Assets equals liabilities plus stockholders' equity. Assets equals liabilities plus stockholders' equity. That's our accounting equation. So basically we're saying that whatever assets are, they have to equal what? Whatever liabilities are plus the stockholders' equity of a company at all times. So you have to memorize this in order to move forward. Assets equals liabilities plus stockholders' equity. So you already know where I'm going with this. What are assets? What are assets? Well, you need to know what assets are. Assets are, by definition, an economic resource that's going to provide some type of future benefit. What are the key words in there? Economic resources and future benefits. I told you guys that accounting is really not a lot of math, and that's true. We deal with a lot of numbers. Why do we deal with a lot of numbers? Because everything has value. Everything has some sense of value. And how do we measure value? Through economic value. Dollars, monetary dollars. So that's when you see a lot of numbers, it's money. And we all love money, so we should be able to relate to the numbers. Okay? So, economic resources that provide some type of future benefit. Okay? Another key word, future benefit. So I'm going to give you a list of economic resources that provide future benefits to a company. Okay? And as we move forward with this accounting stuff, I want you to come up with a 2-second business. What do I mean by a 2-second business? If I ask you in 2 seconds flat, what kind of business would you like to operate? 2 seconds. I don't care what it is. Ice cream parlor, beauty salon, Rottweiler, Doberman Retriever breeding salon. I don't know. Don't really care. 2-second business. And why do I want you to do that? Because I want you to relate to what's going on. Relate it to yourself as if you had a business. Relate it to yourself as if I'm teaching you how to make millions or how to make money with your business. Okay? So what may be considered assets? Economic resources that's going to give us a future benefit. Cash will be an example of an asset. Can you see that? Yep. Land may be an example. Building. Equipment. Accounts receivable. We'll talk about that later. Truck. Supplies. All these are good examples of asset accounts. All these are good examples of asset accounts that could be in the business. Okay? Now next we're going to talk about liabilities. Give you two definitions, the long one and the easy one. I want you to remember the easy one. Long one, economic obligations in which are owed to outside individuals. Keywords, economic obligations owed to outside individuals. Short definition, liabilities are things that you owe. Things that the business owe. Okay? Keyword, owe. Right? So those are liabilities. Now I'm going to share with you two liability accounts that you just need to memorize. And for now, we'll just keep it at that. Accounts payable. And notes payable. Accounts payable and notes payable. They are liabilities. Look at the last names. Pay attention to the last names. His last name of Jackson, he a Jackson. His last names are payables. Give you another one. Interest payable. Give you another. Salary payable. Payable, payable, payable. You guys are smart. I know you are because you're taking my class. Right? So, payables. Last name payables. Liabilities always have, if it has a last name as a payable, it will always be a liability. 90% of your liabilities have a last name of payable. Okay? And last but not least, which is very important, stockholders equity. Stockholders equity. I'm going to clear the room. So, well, the board, I said the room, but the board, so we can talk about stockholders equity.